watching Stock Watch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Schalk Louw from PSG Wealth, Oak and Graeme Körner from Körner Perspective. We are, of course, pre-recording this show today, but continue to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. The rand is just going through it today, and I mean, after such a long time being in the good books, it's now crossed that 18 rand level against the US dollar. Graeme, is this all the Middle East? Because looking at what's happening locally, it seems that things are relatively stable.
Yeah, I think that's exactly right. I think much of it is the Middle East and probably just general risk off. But having said that, although the dollar is a little bit firmer, we're weaker against all the crosses, sort of between 0.5% and 0.75%. So 18 feels like a magical number, I suppose, in our minds. But the reality of it is, I don't think this is necessarily the end of the firming cycle for the rand, because we've obviously been driving forward with balance of payments and trade figures very much in our favor. So I think this is probably more a reaction to some of the geopolitical anxiety around the world, rather than being a vote of no confidence in SA or our balance of payments, etc.
It's quite interesting, Skulk, because we did get good news on the inflation front, with that coming out in line with market expectations and remaining steady at 2.8%. At this point, even with the good news, our investors may be just looking through the good news and considering what the future could look like, considering what is happening in the global sphere.
Yeah, I think just to add to what Graeme said, I mean, I think we sort of this was great. I mean, last month we had an interest rate decline. I think if we sat here a little bit more than a month ago, I would have most probably said, well, the possibility of a rate cut end of last month was pretty low. Now we're sitting in a scenario where we saw that rate cut, and the rand didn't really react. And what I refer to is, usually when you see a rate cut, we do see a sort of just the currency going a little bit weaker, which we didn't see. We actually saw the currency, or the rand, actually improve since then. So yeah, you mentioned it. The inflation data came out 2.8%. What was expected was 2.7. Yeah. So slight miss, but 2.8. I mean, wow, that's still way below the 3% level. Just putting the economist in a position to say, well, maybe if we saw the surprise last month, next month we could most probably see next meeting we can most probably see another 0.25% cut. I don't think that's the case for the movement in the currency. We've seen some weakness in most of the emerging market currencies. It's just a bit of a risk off scenario, and I don't think I'll read too much in the currency, or let's call it the rand itself. We're sitting in a war environment. I mean, this is really a very dire environment. I mean, we see in the Middle East, we know Russia, Ukraine. I mean, India this morning also came out and said they're still not happy with their neighbors. I think we're sitting in a bit of an uncomfortable scenario with the currency for now.
Yeah, indeed. Well, let's get into some of the questions that have come through. There's a question on the takeover of Renogen by ASP Isotopes. How will Renogen be listed on the JSE once ASP Isotopes is listed on the JSE? Will my Renogen shares be under this name? Do you have any ideas how my shares will be allocated? Graeme, are they exchanging so is ASPI taking over Renogen's place on the JSE?
Well, yeah, I think ASP Isotopes is looking at it's going to make an offer together with a standby offer, and I think it's 0.091 ASP Isotope shares per per 100 Renogen. So effectively, if you look at ASP Renogen trading at, I think it was $7.77, if you translate that, it comes out at about a 13 Rand valuation. So effectively, what they're looking to do, and I think the vote, if memory serves, is in about 3 weeks' time.
Yeah.
So the first one will be effectively to ask shareholders, to vote in favour of the effective takeover by ASP Isotopes, and then you'll exchange your Renogen shares for ASP if that scheme happens. And then if not, there'll be a standby offer in terms of which you can offer. I think it's the same ratio. But the plan is to basically delist Renogen and for shareholders to swap that shareholding for shares in ASP Isotopes, which obviously offers more diversification, but you still arguably have the upside of Renogen, although it's somewhat diluted. But I would argue it basically gives Renogen shareholders what they've really been craving for a long time, and that is, the balance sheet to see these lithium, etc. projects through to full production. So I hope that I've done justice to the question.
Yeah, because I've also been wondering, what would I be staying for? I've got some on my easy equities. And considering the fact that when I bought, it was still, as much as we did have this run, still in lost territory. And even now today, Renogen is down 6%, and it's released its quarterly update. Yeah, what do you think of Renogen's performance, Skulk, at this point? And just, is it the right thing for SAP to be taking it over, considering the fact that now it's clear that they've been in financial trouble?
Yeah, firstly, let's get the T's and C's out of the way. I've got no skin in this game. I don't have any Renogens, so I'm just an innocent bystander. No, I think the story is great. The story that they're talking about becoming, one of the biggest helium and LNG, gas producers in the world. That's a good story. You look at the reserves. That's a great story. But as Graeme alluded, they were struggling to get the funding. They were talking about a phase 1, phase 2, which they couldn't get off the ground purely because of funding. Now they've most probably got that back. Remember, this still needs to be approved. So that I would say that's the good story. If they can get this going, this could really be good for them. But as you mentioned, they just got the quarterly quarterly update, and it seemed like it was a bit lackluster. LNG output, quite a bit of a miss. We're talking about 1.3 odd tons that they produced in the LNG space. They forecasted it closer to the 1.4 tons. So that was a bit of a miss. We know the helium production, that was a pause due to upgrades. They mentioned that is on the go again. So that could just show let's call it the financials to be a bit softer than originally anticipated. I think for now, I don't think people are reading too much into the day-to-day or these type of quarterly updates. I think the main thing is now this possible takeover, and if that's going to happen, I think it's a good thing most probably.
All right. Well, let's get into coal. There's a question here on Exxaro, Thungela, South 32. They seem to move in sync with ex-Richards Bay coal futures. Is this something that you've noticed, Graeme? And what does it mean?
Before I answer that, if I may, thanks to Schalk for, I get my chemicals mixed up. I said lithium, obviously, Renogen is helium. But it makes sense that they're going to move in lockstep. They obviously Thungela effectively more of a pure coal play, whereas Exxaro is somewhat more diversified. But both of them are very exposed to coal prices, and then Royal Richards Bay coal terminal prices obviously are a derivative of that. So it makes sense. South 32, I'm not entirely sure because they obviously produce a basket of other commodities, but I would imagine they kind of moving in lockstep, largely I think a lot of them are quite dependent on what happens from demand point of view out of China. But yeah, the bottom line is, coal very much the Tugela play. So coal prices are flying, then you would expect Tugela to do very well. And Exara will do equally well, but of course, then you've got to look at what iron ore and a couple of other commodities are doing in their world. But I think there's another theme, and I've said this many times, and I apologize for repeating myself.
Yeah.
One of the other themes is that the long-term prognosis for coal is not great. Obviously, the Trump administration has rolled back some of the climate undertakings of the US government, but generally, I think the world has moved into a phase where dirty energy and coal is one of them. There's kind of a plan to wean ourselves off coal. So I think although, the coal price has recovered, I think we're about $105 a ton. I think the long-term prognosis is not a great one. And a lot of people don't consider coal to be investment grade. So, a lot of ESG investors, for example, would probably, shy away from it. So the problem is, the long-term prognosis for the commodity, and I'm talking very long-term, because near-term, South Africa is very dependent on coal from keeping our homes warm and industry powered. But the reality of it is long-term, that outlook is not good. And arguably, you're going to be selling to a shrinking client or possible buyer base, because more and more people are probably going to put it on the embargo list. So I think that's the issue. But I would argue that's the reason why somebody like Tungela has probably underperformed the coal price.
Skulk, anything to add there? Particularly, there's a question here, how long will the coal prices be in the doldrums? What could ignite it? But I'm sure in terms of what the viewer's asking is, could the prices go back to what we saw in, 2021, 22, 23? I would imagine that the answer is no.
Never say never. Never say never. It's sort of an interesting one, because I wholeheartedly agree with Graeme's point of view. I think but it's a very similar point of view that you've got for British American Tobacco Company, like, for instance. It's not good, and the future for tobacco products, smoking, and yet they although every year the volumes or the kind of amount of products sold is less and less and less, but the prices go up equally, and eventually they're big dividend payers and still attract the investment. When we look at the analysts currently, it's no different. I mean, analysts currently got a forecast of, if they're 100% correct, they're looking at a target price 47% higher than the current levels. We're looking at a dividend yield of 13 to 14%. So I'm not a holder of this, and I think it'll be a difficult one, but never forget, we've started the show by saying the world is a very, very different place. And remember what actually moved prices back in 2021 was just that. It was a different place, that the supply chain was totally broken, for many, many reasons. Now, just watch the space. I mean, the supply chain could be coming under immense pressure very, very soon. That could put a question mark on coal in the shorter term period, and could drive prices even higher. Like I said, not a holder, but just something maybe to watch the space.
Okay, let's get into more questions. This one is on MTN Zakhele Futhi shares. Can the panel give clarity on the BEE unwind and dividends payout? Of course, I think we had was that announcement last week. Let's talk to me about the mechanics of this, Skulk.
Yeah, it's interesting. It's a separate listed entity, and basically the main holder of they basically just hold MTN shares.
Yeah.
So this is a BE investment vehicle, started 2016, and now they mentioned today that they're going to be selling 3 billion rands worth of shares, or MTN shares. Naturally, that had a massive effect on the share price. That I think earlier today, when I watched it, was up close to 6%. And they mentioned the proceeds going to be for things like preference share funding, tax liabilities, and then unwinding costs, and then eventually they're going to be distributing this money to shareholders. So I think. It's been a long wait. We know that MTN has been a bit of a struggle investment over the past 10 years. So this, let's call it recent movement upward, sort of gave them an opportunity now to get a better unwind price.
Yeah. Graeme, what do you make of this and its impact?
So I think the view was that, if you go back a few weeks or a couple of months, MTN was trading at 80 Rand.
Yeah.
And then this thing was massively underwater, because you need to remember there was debt in the structure as well. And the cost of debt was not excessive, but I think it was 80% of prime. So I think the view that they took was, let's rather unravel it now. The other day, MTN at $130. Unravel it now, settle the debt, and at least then, even if you're underwater, you're not massively underwater. So I think the view was, once they've sold the shares, settled the debt, it translates into a value. I think they're indicating between 20 and 21 Rand odd. I think they're planning on distributing the bulk of that, around 15 Rand, as a dividend. Obviously, that will be subject to DWT if you hold it in your personal capacity when any entity other than a company. So you're likely to get 12 Rand, and then they're talking about a residual value of around 5 to 6 Rand. So, that gets you to, call it, if you take the 12 Rand plus say 5, gets you to the 17, which is roughly where it is. But I think in the greater scheme of things, you need to go back to 2016 when this was issued, and this was obviously a rollover of the previous BEE structure. Then MTN was probably trading at 200 Rand, and that was the core view. You can't get away from the fact that the underlying vehicle has gone from 210 Rand or whatever to 130, and you had debt in the structure. So it hasn't been rewarding. I think the issue was at 20 Rand originally. So people might say, well, I've lost money, which is true, from 20 to 17. But I think the view that MTN and the leadership were taking is, rather than waiting another 3 years with lots of volatility and the debt in there, it's kind of a bird in the hand is better than two in the bush. So hence the view to sort of realize probably around 17 or thereabouts Rands worth of return to shareholders, rather than waiting and praying that everything holds out.
Yeah. And in terms of your investment view of MTN, Skulk, would you say that it is on an upward trajectory?
Yeah, definitely. Things are looking slightly better, and as Graeme just said, things really upped. And I've seen a few recent analysts upgrading their share prices. I think originally most analysts had the share price target on about 110 Rand. I think recently it's been upgraded close to 145, 150 levels. But we need new initiatives. I think they've kind of unwinded a few of the sort of crown jewels. I think they've got Nigeria now sort of under control. It seems like hasn't been touch wood, hasn't been any recent mishaps in that area or in Ghana, any of those areas. So it does seem like it's business as usual. But I think from my side, I would like to see some new initiatives. New initiatives coming from MTN. I think that would definitely help them.
It's actually quite interesting because, MTN is in a better position, and I guess Vodacom pretty stable. But a lot of people have actually been picking Telecom in that telecommunications sector. I do note that today actually Vodacom is down 4%. But I don't know, would investors, Graeme, be finding more opportunity in Telecom at this point?
Yeah, look, I think the results out of Telecom look really good, but you sort of question the long-term strategic merit of selling, towers, for example. So I think maybe the view would be that Telecom has done more to sort of drive the performance, and maybe there's an argument for value there because it's a slightly different model to the Vodacoms and MTNs, which are pure mobile network operators. But I think Skulk's point is very powerful, that we need to transform these. If I look at telecoms in South Africa, if I think whether it's voice or data, it's overtraded. I'm not even talking about a Starlink being in South Africa. You're seeing lots of competition. Our view is that Rain, which I've said before, we held through African Rainbow Capital, and where we continue to hold those in the unlisted, to me was probably the best play in a very, very competitive space in South Africa. So, yeah, I mean, the analysts can upgrade the MTN to 145. For me, the long-term prognosis for voice and data in South Africa and in Africa is not a great one. So, yeah, you need to migrate the business model into FinServe and other things, but you've got to do a hell of a lot of financial services to try and offset the loss in revenue and EBIT from less demand. So yeah, to me the MTNs and the Vodacoms and even Telecom are kind of unplayable. Although, as I say, I think the results out of Telecom looked a lot better than a lot of us might have expected.
We're talking about results. We got results from Braai today. I think I saw at some point it was up 2%, but also I don't know how liquid the stock is. Different dynamics in terms of its portfolio. And of course, it was quite a year with the rights issue included as well. But this has not really been a favorite, Skulk, with investors saying that this stock hasn't really done much for them in a lot of years. What did you make of that performance?
Yeah, I thought it was good. I mean, yeah, it's a tough one because they had headwinds upon headwinds upon headwinds. And then when everything just sort of, we went into COVID and everybody cancelled their gyms, and it was havoc. So it's been a very, very tough time, and it's great to see. Again, I'm not a holder of the company, but great to see that the company is recovering. You can see people, was it 80 Songos hit that perfect beat body? I think people are hitting that perfect beat body again.
Yeah.
Because you can see the Virgin definitely, I mean, great. I mean, 13% growth in revenue, memberships increase, the amount of members that increased. That's, for listeners out there, that's about 62% of the total Braai currently. Then we're looking at about 30% is Premier Group, which now has also been listed, and it's been a really successful listing for them. I mean, it really came out good when we saw their results came out a week or two ago. And it seems like things are looking good. I mean, it's one of the smaller, let's call it, food producing companies. But I thought that the Premier Group results looked really, really good. I mean, a lot of cost-cutting initiatives. That's a general theme that I did see. A lot of companies came out over the last few months stating that, they've got these cost-cutting exercises, etc. But so, a long-winded way of saying, I thought Braai's growth, the 6% growth in the NAV was justified, and it seems like they're back on track.
Yeah, new look needs a new look, but but I mean it's a small part of the portfolio. Just then looking at all the other ones, Graeme, would you say that Braai has kept its head above water?
Well, I would say, we hold them because we held Ethos Capital, and that obviously unbundled Braai.
Yeah.
And if you followed your rights, I think it was 80 cents. At 215, you're really a happy camper. But obviously, there was a lot of damage done, value destruction before that, kind of by the old guard. But I would argue since Ethos and the Renogen group took control of it, I think it's kind of on the straight and narrow, and I think they've offloaded a few assets at good prices. But I think, as Skulk alluded, I think Premier is a good business. And I think Virgin Active, if you look at revenue at Virgin Active, it wasn't up that much, but I think they've been investing in the gyms, and in spite of that, I think the EBITDA was up over 40%. So honestly, I think they're preparing Virgin Active for a separate listing, and if they continue in this vein, then the NAV, which I think was given at just over $3, you're looking at about a 30% discount. If you were so inclined, you could probably short Premier and neutralize that NAV, and then it really becomes a Virgin Active bet. So if you were positive, as I am on Virgin Active, I think you're going to probably do quite well. And new look kind of is neither here nor there. So it's a rounding error. There's 800 odd million rand in a 15, 16 billion rand portfolio. So And eventually, either they'll pull the plaster off or they'll extract themselves from that. So, yeah, I thought it was quite good, and I think Schalk spoke well about how well Premier is doing. It's actually not such a small business. They've got a really nice portfolio, and yeah, from the listing, they laid the foundation from $60 to 140, supported by strong results. Yeah, so I think the short answer is. Rates actually looking quite well placed, but you have to take a view on Virgin Active.
Okay. All right. Well, let us get to your stock picks for today. Skulk, where are you seeing opportunity today?
I desperately tried to make cash my stock pick for this week, but they didn't let me. So yeah, rather than telling you cash is king this week with all the, I'm actually going to go there. I'm actually going to be the guy that say, time to maybe have a look at Sasol. So,
okay.
I think we talked about headwinds upon headwinds about a few companies in the show today. We mentioned their likes of the MTNs, likes of Braai. But Sasol is really one of those companies. It's been struggling. And we know why. I mean, they had quite a bit of debt bar. They've really struggled with the Lake Charles investment, and that seemed to be under control now. There might be some interest in that regard. We've seen the oil price kick up a little bit. We know that oil price was still very recent, trading at the $60 levels, and that's not good because Sasol, I mean, let's call it, they break even on the oil side. It's about $58. Now I know they've already mentioned at their recent Capital Markets Day that they let's call it targets by financial year end 2028 is to bring that down to $50. And actually, this massive kick in the oil price has now sort of put a new view on Sasol. And I think this might just be one of those hedges for if things escalate even further geopolitically, they might just be one to have a look at. I am a holder.
Okay.
So
all right.
I'm a holder, so definitely something to look at.
All right. What are you hanging your hat on today, Graeme? I think we have about 30 seconds.
Yeah, I'll go with Valterra, previously known as Amplex. You've seen the platinum price kick up, from just around 1,000 to 1,250 thereabouts. I think outside of the Anglo stable, this one could do well. It's not for widows and orphans, but I think the next 2-3 years look quite exciting for the platinum producers, and I think Valterra is well placed for that.
All right. Thank you so much for your time, gents. Really appreciate your analysis today. That is all for tonight's Stock Watch. Thanks to our guests, Schalk Louw from PSG Wealth, Old Oak, and Graeme Körner from Körner Perspective. Up next, The Close. Stay watching.